So here we want to look at just some updates on the surplus, the demand side. So here you can see that the EIA is now estimating that there's going to be a surplus of crude into 2024. But then when you look at the IEA, they're showing a minus 200,000 barrels. The US EIA is showing a positive 200 barrels. So again, you're on a cusp. I mean, that's so minute in terms of shifts. And that's, I think, what they're looking at when you start seeing the setups going into 23 and then beyond. Because in the US EIA, you can see that we're even showing some builds, net builds in 2023. When you look at OPEC, they're showing a bit tighter market and additional drawdowns from the storage side. But realistically, the problem that we see especially when we're looking at OPEC, I think they're overestimating demand. And I think that's a bigger issue in general when you look at some of these different shifts. They're also, and it's interesting because they're also showing a bigger increase when you look at just the demand side, and that's where again we don't see demand the way OPEC does, especially as we go into the back half of next year. Given the fact, and we've talked about this on the Econ Show, we see this slowdown being persistent into next year and not just ending at the end of this year. Now, when we start looking at refined products, it's important to look at China and India. China, you can see, is at a very high level when you look at the exports of refined products. India is something very similar, and this is because they're slowing demand internally. China is getting a little bit better, but still well off of what was expected. And you're seeing a great market. So why wouldn't you try to take that on? So as we said before, there was I think 3 weeks ago, there was about 27% of the second export quota, the second batch that was available, that has been used up. And there's early indications that the third batch has been announced and the companies have been told what they've been allotted. It is sizable based on what they've said. We don't know. We don't have an official number yet. But if you just look at where exports are, it's kind of supporting that. It's probably pretty good. And that's going to put more product in the market, which again is going to shift a lot of these flows, which is why we see China and especially Russia struggling to kind of continue to sell some of their exports on the refined product side, because now you have who they were selling to, which was the Middle East, parts of Asia, that are now being inundated with some additional cargoes. Now we are still very low on middle distillate gas oil storage. So even though we're going to get this come through, it'll put pressure on cracks, but won't make them go away in terms of the value that they add. So that's going to keep some of the refiners active, and that's going to help with the storage situation. But then when you look at the light distillate side, we'll put pressure on the lighter ends. Now, when we start looking at that refined product exports coming from abroad, you can see that Saudi Arabia, this is the second most they've ever exported. The UAE is also at the very high end, and Kuwait has had a big bounce. And this is just because, well, why am I exporting oil when I have all of this product? Let's export the higher value barrel. And here we get another big, nice export bump, and that's something that we see continuing. Just given the fact that they, especially Saudi Arabia, they'll likely keep that cut an extra month, at least when you look at October, but it doesn't mean that they can't increase their runs internally and export. So we do have an announced 2-month turnaround by the UAE, so we should see some of this drop down, and they'll likely offset that by exporting a bit more crude, which, given the fact that some of their blends compete directly with with Saudi, that's actually a pretty good situation when you think about the OSPs going forward. Now, when we turn to Russia, here you can see that the refined product exports have come back up, but have still been fairly slow, and that's just because you don't have the same buyers. You can't sell into Europe technically. You can't sell into some of these areas that have sanctioned Russia, but you could sell into the Middle East. You could sell into these places that are now net exporters. So that's where we're seeing some of these pressure points, which will take some time to alleviate. And then when you start looking at crude flows coming from the Middle East, here you can see that Iraq is still at a fairly muted point. UAE, Kuwait, something similar. Saudi still has that nice drop. But remember, Saudi had a big drop in refined product exports, big drop in crude exports, and it's all a matter of putting them together to look how they offset. What is the net reduction versus, oh well, it's all down because of crude exports? It's like, well, no, they've offset it in a certain way, and then we do see some additional coming from Iraq in the near term. Russia is exporting a bit more than expected. That happened at the coming into the end of the month. So far September is a little bit slower. We do expect that to pick back up, not getting back to where it was, but you can kind of see recovering, because they are allowed to bring back another 200,000 barrels a day of production. Not to say that they can or will, given some of the pressure that we're seeing on the refined product side, which is going to slow down some of their refining activity. Global crude on the water, we're still well above 2020 levels. We're still well above 2022 levels, but they're coming down, and this was part of the goal of what Saudi was trying to do, trying to balance out some of this, trying to take some of this down. And it's being helped more so by the fact that you just have less new buying from Asia. And that's, again, they're just trying to now clean up some of their storage. And the same thing can be said from Russia, where they're just not selling as much into the market, because the only real way or meaningful way that they could get product into market was by the water. And as they slow down the crude side, that'll naturally pull some of that additional crude off the water. Crude oil in transit flatlining a bit. We're still at the very high end. And again, it's just because Russia has no other way to get crude out there. So that's obviously they have ESPO, but you know what I mean in terms of what normally happens versus going into what goes into Europe versus what goes into the ocean. And then when you look at floating storage, we're back down to the that 5-year average. You can see that we're below where we were in 21, but we're above where we were in 22. And that's kind of the balancing act. But it's important to look at the last 3 years. There was normally a nice drop here, and then we had a sizable switch. So I think it's important to put that into perspective, because we're coming to the end of peak demand. Now we're going into shoulder season. Some of these guys are already slowing down. The teapots or the Shandong refiners are already slowing. So people are making a big deal about this, but it's like, all right, this is one data point, and we had it 3 times prior, and then there was a nice reversal. So again, we want to look to see how this plays out over the next few weeks. The Middle East is hugging where they were on the 5-year average. It's above where we were last year, but you can see it's kind of staying at this elevated level, which is why Saudi's looking at this and saying, well, we're still on the higher end. We're coming into a weaker period, and that's why the market is sitting there saying, oh, no, they will. They definitely will. Well, now that the market expects it, if they don't, the surprise to the downside is going to be sizable, as it's gotten priced in, which is why we're kind of sitting right where we're sitting. Then when we look at spreads for NAPHTHA and fuel oil, you can see that NAPHTHA rolled back over. We don't see much demand on the gasoline front, especially when you look at some of these underlying flows. But even the fuel oil side is starting to roll over. And it's because that you're starting to get a little bit that excess of middle distillate. You're starting to get a little bit of that excess coming in, and it's small, but it's enough to start softening this. And this is going to be an important one to watch, especially when you look at the fuel oil side. So now when we start looking at flows coming from the U.S., it's rolling, it's coming down just a bit. We think it continues to just moderate a touch, especially as you get some of the slowdown in Europe and not a lot of new buying coming from the Asian markets. Just as we talked about the U.S. Crack spread in the U.S., something similar is happening in Asia. You're seeing some of the softness coming through. The Asian markets are a little bit tighter than what we're seeing in the U.S., but which is again keeping that east to west arb closed. But we are seeing a sizable amount of Chinese products starting to show up. That is continuing to kind of come through, and that's going to put a damper on this. And we do see some additional downside on the paper front in general. When you look at Dubai versus Brent, Brent is still cheap, and this is a problem because Brent is cheaper, but yet we saw some builds in floating storage in North Sea and in Europe. We have started to see some price reductions on the physical side, which again is going to just make things a bit worse for the Middle East. And that's something that, again, obviously the physical sales are still better than they were, but there is this downward pressure, which we don't see really getting alleviated in the near term. And that's going to be an important piece to watch to see, okay, well, are we going to see bigger buying because of it? And that will help support pricing here. Right now we haven't really found a clearing point, especially when you look at Asia. So Asia is tracking fairly closely to what we had in 2022. It's below 22 numbers, but you can see there was a drop in 2020, in 2021, and 2022, right at this around the same time, and then we started to see some of these increases. We expect to see an increase, but as we've been saying, it'll be floating storage in Asia. We're expecting to be higher than 22, but below 21, and that still is something that we see playing out given some of the flows. And here's why. China tanker, super tanker imports are still at record levels in comparison on a seasonally adjusted basis. And they're just kind of going sideways. They're still finding deals. Ships are still showing up. They're still slow steaming. So again, this is as this shows up, even as we get some slowdown in refining activity, that's going to again go back into storage. Slow down, leave some of this excess when you look at what's going to show up at the coast. And here's just an example. We thought that the Shandong refiners were going to continue to kind of trend a bit higher and get much closer to the 5-year average. You can see that it's on a trend basis, seasonally speaking, it's trending in the same way, but just at a much lower level because we never got back to that 5-year average. And as that happens, you're going to have a slowdown in production. You're going to have a slowdown in runs, which again is going to slow down your crude demand and push some of that back into storage as they try to balance, because now they have to export some of their product because they're long product, and they're balanced with crude. They need to work through some of the products so that they can run some additional crude. And that's where we continue to kind of see things sit. China congestion index went higher. For those that remember, or if you look to the right, you can see that this is where we did have some lockdowns, which reduced activity. And so the comps are a little bit easier. But again, nice to see a bounce. We don't think it continues too much. It's already starting to kind of peak and roll over. But I shouldn't say peak and flatline. We just think it flatlines from this point, just given some of the data that we've seen come out. We thought it was a little too low, just given there was a little bit more activity. As we've said, the economy is not in a recession. It's just slower than what is expected. So again, we do see some of that bouncing. West Africa is still struggling to sell. There's rumors that Nigeria has been able to sell some cargoes. There's no real indication on price. We did hear it was lower than what was posted, which is likely. They still have, so technically on the screens, they have 31 cargoes to sell. I've heard that they've sold about 5. So it's probably closer to 25, maybe 27. But based on today, with some of the softness that we've seen, some price reductions, maybe they were able to clear a bit more. We're expecting to see about 21 to 23 still remaining, but that's still a lot going into September, which is why we do see some of that pressure point on pricing. U.S. crude exports, gasoline bounced a bit to 24,000 barrels a day. Distillate bounced a bit as well to 126,000 barrels a day. And you might be thinking and sitting there and saying, well, you said it was, our exports were going to slow. It's like they are. It's just you forward buy. So, this could have been, they could be loading cargoes right now that were sold 3 weeks ago. So I'm just saying that there's going to be that lull, which will, again, kind of pull that down. Propane, propylene, still gangbusters, still staying at the high end as we continue to see things remain robust on the LPG side, and we're priced to move. Gasoline staying above the 5-year average. We just think it trends a little bit lower, closer to the 5-year average. But again, still likely going to stay higher at this point, just given kind of the balancing act that PADD 3 is trying to do in the market. Distillate, just to kind of put into perspective, it's actually fairly normal here. You had two sizable increases during 19 and 2022, which kind of skews it to the upside. It's still higher. We do see this trending down, but this kind of puts into perspective kind of where things sit at the moment. Then when you look at crude oil exports, staying strong, we do see some trending down. But by trending down, we're going to 3.7, 3.8, likely 3.8. So again, still staying at the higher end at this juncture. LPG, again, it's just going to continue to blow out against historics. We're still going to be at a very high level, which is going to be, again, a very strong export level. Ethane, something similar, blowing out. Because for those that have been following us, we said that the previous exports seemed a bit low. And I think there's a lot of makeup number, but again, we're back to where we think we were going to be and then, again, stay elevated at this point. Now, when we look at Fujairah, so Fujairah is down to 17.3 million barrels in storage. That's a drop of 279,000, but that was really only driven by light disti. So light distillates decreased 845,000 barrels down to 5.515. Which is a low level, but the gasoline market is softening, and Chinese gasoline exports are rising. You're seeing some of those releases regionally. Gasoline prices are a bit stronger in the Middle East, which is slowing down some demand. So this is a bit of a timing delay, which can last obviously a week or two, and that's why we do think that light distillate's going to pop, because what we were saying is we saw builds in all three. We got builds in 2 out of 3. So we think that the light distillate is just a little bit on a lag. Now, middle distillate rose 66,000 barrels to just over 2 million. The East of Suez gas oil market, like the gasoline market, is under downward pressure, and you are seeing additional Chinese volumes coming out. There's been, Chinese oil companies received new oil product export quotas for September, even though there's no formal announcement, has been issued by the government. Global gas oil diesel demand growth is expected to grow, but even that's starting to moderate a bit, which is, again, pulling down some of that pricing. Heavy resid rose 500,000 barrels. It's right at 9.795. Spot trading activity, ranged between kind of flat to moderate, nothing crazy but it's continuing to underperform because we don't have that demand on the shipping side as we have in the past. Brent time spreads higher. We had some strength. We do see this weakening a bit, but it's still going to stay in backwardation based on the underlying structure. When we look at flows, Angola took some flows higher in October. A lot of that is driven based on some small deferments, so not too much of a change. We do see that Norway is remaining strong. North Sea is remaining elevated. And realistically, the healthy diesel cracks and cheaper freight costs have boosted some Nigerian grades, although unsold cargoes weren't shifting yet. And that's what we've been saying. It's like we want to look at what is shifting, and the rumors are that there's about 5 with some more behind it. So we're likely at about 23 remaining out of the 31 that we started with, which is still not a good track in general. And then when you look at Asian flows for August, 52 cargoes of crude are due to load for Asia this month, equating to about 1.56 million barrels a day. That's a bit lower than what we saw of 1.61. So again, you're seeing some of those slowdowns that we've seen in general. When you look at Genscape going for European crude. European crude, as we've been saying, is still at record highs. It's just below the 2023 high, which was last week. But we're seasonally speaking, this is the highest it's ever been. So again, that's where we see that slowdown. And even though everyone's looking at the U.S., it's like, well, other places aren't seeing draws. Like, we're actually seeing builds, which is counter seasonal. So typically we see draws accelerate aggressively as we go through September in Europe. It's going to be interesting to see if that plays out, because right now, based on what the refiners are saying, is don't hold your breath. So we'll see how steep. We will get draws. The question is going to be how aggressive, or the rate. What is the rate of change of those draws that we get this going into September, October. We did have a bit of a draw from gasoline of 114. Realistically, there were draws across the board. Gasoline, that's a good thing. Gas oil, that's a bad thing. You can see gas oil is dipping lower. This should start to reopen the ARB. It's still a little bit tight, but we should start to see some of this movement, which will be a bit supportive. When you look at gasoline, we're back below 2020, 22 levels. But when you look at historically, the gap between the last three, essentially 2020, 2022, and 2023 is massive. That is a steep gap. So again, we're still at very high levels that, we should see some exports start to pick back up following the hurricane. We'll likely get a build this tomorrow that comes out tomorrow at 10:30 Eastern time. So we'll likely get a build back, up, but it's still going to stay at these elevated levels until we get a meaningful opening into the East Coast. Fuel oil, again, seasonally adjusted, all-time highs. We're above where we were in 2020. We're above where we were in 2022. And that's going to be a problem, which, again, is going to, why crack additional crude when you can blend? And then, because the west to east arb is completely shut. So again, and likely east to west opens way before west to east. So east to west, west to east, I know it can get confusing. So again, that's why we do see these fuel oil inventories remaining elevated. Fuel stockpiles in Singapore are back above that 18-year high, 18-year average. And as we've been saying, it's going to continue to trend higher as these flows start to enter the market. And that's when you look at light distillate, still kind of flatlining. We do see this trending a bit higher. But the biggest driver is this big increase in middle distillate. And this is going to be interesting to see because this could, depending on the rate of change, which as you can see was actually fairly sizable, we normally get rate of change increases around these levels historically. So the question is, does the rate of change stay like this? Does it happen for multiple weeks? Because typically, based on historics, it happens for 2 to 3 weeks and then it slows down. That'll kind of see where we are. And if it happens quickly, well, you'll see the crack spreads react quickly, and that'll shut some of the arbitrage coming out. But at the same time, India and China created product at fairly discounted prices. So even at a tighter crack, it's still going to be economic. So this is going to be an interesting one to watch as we go into the next few weeks. And then, as we said last week, heavy resid resid and heavy disty continues to build. Given the backdrop in the market, we don't see too much of a change in that. Realistically, North Sea crude oil floating storage continues to trend higher. Again, this was on back of pricing. We do see some pricing coming down, which will help move some of these cargoes. And the same for Europe, staying a little bit elevated, which is going to keep things fairly elevated on both the land and on the land side until we get some of those pricing discounts. So that's what we have for you today. If you have any questions, please feel free to reach out, and we hope you enjoy the rest of your week. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.